First and foremost, credit rating practice is a business to provide market intelligence on countries' capacity to repay their debt. As any other business, it needs to be regulated. But unfortunately, in Africa, there is a big vacuum. So this activity is not regulated. In the US, credit rating agencies has to abide to certain rules. Likewise in Europe. But in Africa, there is no such regulation. So it's very important that we build capacity, we consult with bodies in Africa like the African Legal Support Facility to know how to regulate this activity, to avoid impromptu actions that credit rating agencies may take that will deter African countries' perspective or judgment about their capacity to repay their debts. For instance, it happened in the past that if something happened, let's say a change of regime or any kind of economic shock, 2 days later, a credit rating agency can make a reassessment about African country capacity to repay debt. But it doesn't work like that in Africa, in Europe or in the US, because those countries understand the importance of those opinions. So those opinions should be expressed in a very regulated manner, not to disturb financial markets. To prepare for the engagements with credit rating agency experts. And they should have a committee, a permanent committee composed of experts from different line ministries or institutions. I think about the Ministry of Finance, I think about the Statistical Institute, who is responsible of compiling economic data. I think of Ministry of Planning, any expert, and they should send the best expert who can really challenge and make sure that they provide a proper opinion. Beside that, we have also to understand that this opinion is expressed based on fundamentals, economic fundamentals. How robust is the economy? Which means that African countries should also engage into structural reforms to strengthen their capacity to create wealth and to move out of this category of low-income countries. Basically, a poor country cannot really raise money. As individuals, we are not keen to lend money to a poor person because we know that that person is not capable of repaying back. This is the same analysis applies also to government. As they are considered poor, so lenders, investors are not keen on investing in those countries. So that's why it's very important to uplift Africa. And we are grateful that we have a lot of support from the African Union and the Economic Commission for Africa that support countries to really implement the African Free Trade Agreement and also support them to implement a research-based industrialization strategy, whereas country will transform add value to the wealth of natural resources that they are endowed with.